investors and traders, and welcome to the weekly market report with the market guys. I'm AJ Monty. If you've been following along with our weekly market reports, you will have seen the extreme accuracy in the candle charts with regard to predicting the markets. And as I do each and every week, I've left my lines on the chart from last week's report so you can see how the price action played out. This diagonal line is what I drew at the end of last week, basically forecasting that the market would go higher, and you can see that the market went right to the end of that line, and here we are Friday the 4th, and we closed just a tad over the end of that line, which again was where I thought the market would go to. Now if you look at the volume, it's not increasing in any dramatic way. So that tells me that the buyers, although they haven't given up, it's not showing great excitement about upside price action. So I think looking into next week, we might go a little bit higher, but ultimately I think we're going to come back lower. And I'll show you why when we finally get to the VIX. So I'll erase this line from last week. We will leave this new forecast line in place so you can get an idea of how well and accurate the candle charts are, and this will help build your confidence in the charts as a tool for not just managing risk but for forecasting. One other thing I see is a gap up here. We could go a little bit higher to test that gap, but I just don't see the major volume overall building, and that's usually a negative sign. When price is going up and volume is dropping, that's usually bearish. Now if we look at the SPY, which is the S&P 500 ETF, we'll see a similar scenario where the market moved up exactly. I mean, it's uncanny how accurate this is. This was drawn last week. You can see we stopped almost right at the close here to the penny. The difference here in the spiders is that we see the volume going up, and that tells us that for the spiders, the buyer's a little bit more motivated. If I look at this, you can see that there is a resistance area going to be at the gap fill point. So I'll erase this line right here. Again, last week's forecast. I'll draw a new line. I think we can go up just a little bit, and then ultimately pulling back just like that as we hit that resistance point. I don't think price action is going to get higher because this is descending highs showing lower highs. I think the resistance area is going to be right there, right around 205 for the spiders. So keep an eye on that. I would not get aggressively long here at all. I would be very defensive in any long positions and maybe even starting to move to cash. If I look at a more broad-based index, which is the Russell 2000, you'll see again the lines that were drawn last week right on target, with the angle even being so accurate. This candle right here showing a long shadow on top gives me reason to believe that the sellers are starting to move in here. Now for the Russell 2000, there isn't any volume showing, but what I'll do here is I'll remove this drawing right here. I'll draw the new forecast. I think this is what's going to happen to Russell 2000. We'll pull back pretty much in that angle. Another reason being is that we have 4 consecutive days of green candles. We're long overdue here for a red candle, so I think we'll start to see some resistance building there. Now for the NASDAQ, represented here in the Qs, it's also known as the power shares. Interestingly enough, we are showing spinning tops and dojis, again after an accurate forecast with my line being drawn last week. You can see the angle of the price action perfectly in line with what I drew. I will reverse that right there. And notice the red candle here is on red volume, so I think we could easily see a pullback and a breakdown below what is a newly established support level. I don't think we're going to go much higher in the Qs. I watch volume very closely. I'll erase these as well. The spinning tops and the dojis here again tell us it's a sign of indecision. The buyers are just not quite convinced. So the Qs are expected to go down. Again, this is my opinion, my analysis of the markets, and we are extremely accurate. So be very defensive in any of the NASDAQ stocks you have as well. Now finally, I'm going to talk about the VIX. I did not talk about the VIX last week. I don't always talk about it, but I always look at it. And you can see here that there's a series of red candles followed now by a green candle at the close of Friday right there on March 4th. And so I think what we're going to see is a bounce in the VIX, and it could be a significant bounce. This is a spinning top very close to support level. The VIX is a contrarian indicator that is inversely related to the S&P. So if I'm bullish on the VIX, and some people even trade the VIX through VXX and other means, even the option markets, if we're bullish on the VIX, that means we're bearish on the S&P. And I've already disclosed that to you, that we are bearish, or at least taking a more bearish opinion on the market. So again, this is just another reason why you don't want to get aggressively long in this market and be defensive. If you have any questions about any of the things that I've mentioned so far, you can go to the Market Guys website and go to our video library. You will see a series of what we call market shots, very short videos that you can review, 3 to 4 minutes long. I think one of the longest ones is 7 minutes. But you could work that around your schedule and get to learn about some of the things that I'm talking about. So you too could build your confidence in at least your own ability to forecast the market, and you always could fall back on the Market Guys for a second opinion or even a first opinion. We are, again, tracking the best percentage of accuracy in the world. There is no one that has a better record. So stick with us, and we will surely lead you in the right direction. So have a great week, and we'll talk to you soon. So long.
This video segment is a small part of what the Market Guys offer through their educational products and services. If you are interested in any of our Trade Alert services, or you would like more information about our one-on-one mentoring program, simply contact us at info@themarketguys.com.